Good afternoon. Thank you for your interest in GoGold. I think first talk a little bit about what we've done in Mexico over the last 27 years. I've spent my whole career there building mines. I'm on to my fourth mine. Really, to be successful, I think in the junior mining producing, you need to be able to raise capital. These are very capital-intense projects. You need to have a good, solid technical team and be able to execute, and we've done that. Gammon was the first down in Mexico. And there's an overriding theme here. We've acquired these projects that are kind of off the radar from private families mostly. We brought capital to them, we brought them to the public markets, and we've made a lot of value. Gammon, the Ocampo project, we bought for $15 million back in 1999. I was CEO for 12 years. We built two mines there, two very large mines. At the top of a very good market, it traded at $2.2 billion. Ultimately, it produced 1.25 million ounces, still producing, and it was sold to Carlos Slim for $750 million US. After that, there was GoGold. Same situation, $20 million, private family in Guanajuato, an asset called El Cubo, one of the main assets in Endeavour Silver today. We bought that for $20 million. It was bought by Rico for $367 million, operated another 7 years and sold for $250 million to Endeavour. Nayarit Gold, I wasn't CEO of that one, but I bought a large portion of the company in the market. I was consultant to them. We brought it through pre-feasibility study. We sold it to Capital Gold in 2010 for $80 million. And the latest one is GoGold, which I've been CEO for the last 3 years. I'd also be the second largest shareholder of the company at about 16 million shares. We have 172 million shares outstanding, fully diluted about 179. Nice thing to have in this market, we have 16 million US cash. Debt, no debt. 30% of the company is owned by insiders. Like I said, I'm the second largest shareholder. 16 million shares, and I bought another 500,000 shares here in the last about 4 months. And you can see the institutions, some that you'll recognize. So GoGold, what is it? Development assets and one operating mine in Parral. I'll talk for a moment about Sandra Gratuitous. Sandra Gratuitous was a development asset that we acquired in April of 2014. $9 million, half shares, half cash. Spent $11 million over the next 3 years, and then we sold it to Agnico. We sold it for 80 million US cash, about a little over 12 months ago. We decided to keep a 2% net smelter royalty on it. We also sold that. We sold that 5 months ago for 12 million US cash. We took half of that in cash and half of it in shares of a company called Metalla Royalties. That's done pretty good. We got those at 78 cents. The stock's traded up to about $1.38. It's trading around $1.10, $1.15. So we're doing very well on that as well. So basically, bought an asset a little over 4 years ago, had 20 million into it, and we turned it into 95. Then our operating mine, which is Parral. Parral is a tailings retreatment project. You know, people look at the tailings retreatment and say, well, that's not really sexy mining business. You have what you have. That being said, there's 20 million tons that we built in 2014. It's producing. We're probably the first in the industry who built an agglomerated heap leach around tailings. Why did we do that? Well, they're good grade for a heap leach. And the capex to build a heap leach was only $45 million. This is operating at about 7,000 tons a day, so cheap capex and cheap opex. So pretty easy. We pick it up, free digging, we mix it with cement, we put it out in a heap, we leach Merle Crowe because of high silver, make a concentrate in bars, and we sell those. This is the fourth mine I built, the smallest. It was the toughest. Didn't work right off the bat. Like I said, we were the first people to do this. So we had a feasibility study from a group in South Africa, MDM, and used KCA out of Reno, the experts on heap leach. Unfortunately, on tailings, the feasibility didn't work the way it was supposed to. We tried for 2.5 years with that recipe, and we threw it out the window. And what we did, we rebooted the thing. And over the last 2 years, we've made it work. We had to actually back up a bit. We had to reduce the tons. 3,200 in 2017, 4,400 tons a day in 2018. And in this year, we predicted we'd do 5,000 and 6,000 tons a day. We recover about 1.2 ounces per ton. So I'm happy to report last quarter, we averaged 5,000 tons a day, and last month we averaged 7,000 tons a day. So really, with the ounces putting out there right now, we will be self-funding, and with $16 million US on our balance sheet as well. That's the recovery curves after we did in the field, and we made it work. We got the recovery curves we were supposed to get from the feasibility study. Now, all that being said, that's our operating asset. Where do you really make the money in the mining business? On exploration, development, and finding those new great deposits. And we have a history in Mexico of doing that. And we have a history of finding the off-the-radar assets. Ocampo, $15 million to $750 million. El Cubo, $20 million to $367 million. Sandra Gratuitous, $20 million, 3 years, up to, well, it's a little more than that, about $95 million. And this is the latest one, Los Ricos. Now, I've been following this asset for the last 8 years. I'll tell you, technically, there's a lot of people in Mexico know this is a great asset. We got a great deal on it. We're paying $1.5 million divided over 60 months for the first 5 years, and then $11 million we can buy the whole thing out and own it 100%. Why is it a great asset? In 2.5 minutes. Have to talk a little bit about the history here. Obviously, like a lot of things in Mexico, the Spanish found it. Then the Americans came down there in 1908, a family called the Daly family, who the father of the son here was Marcus Daly, who found Anaconda copper. And he went down with his brother-in-law, who was the U.S. ambassador to Germany in 1917. Anyway, he had diplomatic relations with Mexico as well, and that's how they picked up this project. Great infrastructure just outside of Guadalajara, 35 kilometers of strike length. We're just going to look at about 3 kilometers right now. That's the map right there. And here you have it. They mined that out from 1908 to 1929 until they were thrown out of Mexico, because Mexico at that point pretty much went communist. And they mined down to 500 meters. And what did they mine? They mined 2 to 4 meters wide in a 25-meter wide zone of mineralization. And they mined 800 grams of silver on average and 4 grams of gold. And what did they leave behind? They left behind things like this: 16 meters of 16 grams, multiple intersections here of 5+ grams, 35 meters of 6 grams. We started drilling here. We got our first 15 holes done. We had 1 drill rig. We're upping that now to 2. Drilled the best drill hole of my career at 21 meters of 24 grams. And we also found an enormous treasure trove of data in an archive up in the US. We're taking that mine. We have 8,000 underground samples, which we're modeling right now. That along with 75 drill holes. And we think we're going to end up with an open pit here in the first target of, we think it has potential to be upwards of 1 million ounces at a superior grade. We think it's not unrealistic that we have the potential of finding a 2 to 3 gram open pit, and that's on the first target. We're now moved off to the second target, which is just 750 meters down strike. That one has never been mined. We're testing it on surface right now with trenching over 1 kilometer. We're seeing 25+ meter widths of multi-ounce grades on surface. We'll be talking about that over the next few weeks. And we have the potential of finding more ore shoots down there. So for me, I'm a buyer of the stock, even though I own 16 million shares. The reason being, I think if not as good as my Ocampo mine, I think this has the potential at this stage of development to be as good or better than that project. Thank you.